Hi, I'm Bill Singer. I'm with Kenwood Management, and today we are talking with one of Kenwood's investors, Mitch Lustig. Mitch, I am so appreciative for you joining me today. Thank you and welcome.
Well, thanks for having me here, Bill. I think the opportunity to discuss the real estate market and how it's affected me personally is something important that I'd like to share with other potential investors.
Great. Well, let's kind of jump right in. Let me ask you a few questions. Tell me a little bit about your background as an investor and what led you to even think about investing in commercial real estate.
You know, from the day I had my first professional job, I'd like to say that I was an investor. And I gobbled up as many opportunities as I could, excluding commercial real estate, because commercial real estate requires a lot of skills and a lot of time and has what I would say high risk and barriers to entry. So it's something I didn't dive into quickly because I didn't feel it was in my sweet spot, but I always did have an interest. So the opportunity to get involved with your organization was timely and very beneficial.
Right. And as an investor, as you were going through that thought process and you were evaluating Kenwood or other companies, what were some of the things you were looking for and what were some of the concerns that you thought you might have?
You know, some of the concerns were longevity in the market, risk tolerance. I think, you know, everybody has a profile of what they're willing to put out there to get a return. I would say I'm somewhat conservative. So finding the right group, as I mentioned, I didn't have the wherewithal to actually put these deals together. So it would take somebody with a core competency to kind of, you know, lead me into this. And actually by meeting you and your organization, it gave me an avenue that I hadn't really explored before.
So let's dive into that a little bit further. As you kind of thought about different companies or different opportunities, what were some of the key things that you were looking for in deciding ultimately who to invest with?
You know, I think, you know, when we initially met in our business group, we met on a somewhat regular basis. I don't know if you remember, I'd pick your brain. You know, we weren't really talking about doing business together. As a matter of fact, I think I'm the one that came to you and asked for an opportunity as I got to know more about you. But I was really looking for, you know, a value play and somebody that would have skin in the game. Those were two things that are important to me, and somebody that had some years in the business, and plus the little bit of pedigree of that Goldman Sachs. So I think all those combinations led me to, you know, this organization may be viable for me, and that's why I jumped in.
So by skin in the game, you mean somebody who is investing alongside you, correct?
Correct.
Somebody who's putting their own money at risk,
Correct.
just as you are.
Yeah, it's a much better feeling than you know, ponying up all the money and somebody else managing it. So that's just a theory that I have with other investments I have. And I do the same thing on my end, so
Yeah.
it makes a lot of sense to me.
Okay. Did the fact that Kenwood managed the properties as well, did that have value to you? Was that an important part of the ultimate decision?
Actually, to me, that's a no-brainer because you have the asset. You want to have touches with the tenants. You want to work with them through the leases. You want to have the opportunity to renew the leases and be the final decision maker, you know, with them to make that happen. And I think it just knocks down attrition, right? The attrition in this market is the death sentence because of the high TI build-outs. So the more you can be connected to the people who are there and they love you, the less you're going to have to come out of pocket to find new people and build out their space. So I think that's an ideal model. A little bit more labor intensive for you guys, but I think that's probably one of the stronger suits that I like about your model.
Right. What, as you know, one of Kenwood's investing perspectives is really kind of a long-term one, frequently in excess of 10 years. How does that mesh with your investing goals, and how did you kind of get comfortable with a long-term investment like that?
Well, I think the history of my investing has always been the long-term play. I haven't been fortunate enough or privy enough to, hit grand slams in 6 months. That has not been my MO. So that's kind of what I've practiced, and quite frankly, what I've seen from many of my peers who are successful, that it's a long-term play, and real estate in the right place at the right time can be very fruitful. And as we both know, it's getting the right piece of property to get the love.
Yep. Let's touch upon something that you kind of just brought up, which is Kenwood is a very selective in the properties that it ends up acquiring. Kenwood's not a company that puts kind of multiple properties in front of you in a particular year. There may be one or two, and frankly, sometimes there's none, just because they haven't found the right opportunity. How does that make you feel, and how does that help you prepare when they do submit the new property to you?
So I think because we do talk on the phone periodically, I think that's one of the things that I like about dealing with your organization, and you in particular as my point person, is that I can always pick up the phone and say, hey, you have anything going, and you'll say, hey, interest rates are still a little this or that, and kind of walk me through where your head's at and what you're planning on doing. So I think your communication is always right on par. So I think you set the expectation. For me, I don't think we've ever had a conversation that I can recall where you said, we're going to knock it out of the park this year with six new acquisitions. I think you always kind of downplay it, and it's always a value-driven thing, which I prefer. I mean, I'd rather wait and get the good one than, get one. So.
Let's explore kind of the communication part of what you just brought up. I'd like to dive into that a little bit further. So, when Kenwood finds a new opportunity, kind of describe as an investor, and as if you were talking to a new potential investor with Kenwood, how would you describe the way they communicate the information that they provide to you in that kind of pre-acquisition process?
Right. So I would take it one step even before that. So for me, it's familiarity. I've been in this area since I graduated college a million years ago. And I know you have a wide bandwidth of people who are investors, and know many of them through different relationships, who speak very highly of what they've accomplished. So I think for me, having never invested in this kind of setup, it was very comforting to know that there was other professional people who had bought in and were happy with the system. So I think that takes a little bit out of it. So that's the first thing. The second thing is the approachability, the prospectus, right on target, never overselling. The ones that I've read, you've never, it's not pie in the sky. It's always what it is, according to Bill, and I like that. And it gives you a chance to really delve into it to see if intuitively I'm on the same page as you are, and I have been. And then the prospectus, and then the communication. Not every deal is a slam dunk. Every once in a while, guys like me have a couple questions, and it's hey Bill, send an email, can we talk for 5 minutes? And I'll have probably a silly question, but an important one to me, and you'll answer it back, and make me feel comfortable about it. And when we're off to the races. And then secondly, on the back end, the interest, that it throws off has always been right on. It's consistent, right? I think the thing that I would tell somebody is that, what you get from Kenwood, what they propose to you is what you're going to get. You're not gonna get a smoke and mirror. You're not gonna get something that's just not viable. You're gonna get the truth. Do things change? Yeah, things change, but it isn't gonna be because there's any deceit or any type of undermining going around. And I like that. I mean, I'm a businessman myself. I can appreciate it. Things like that happen in my element as well. And when you have honest people working together, good solutions always work out.
Great. And how about the communication that Kenwood gives you once you are an investor, once you've invested in something? How's been the communication on the progress that they're making with the property, the leasing, whatever the specific plan was?
Well, you've made it a process, which is really with as many people that you work with, the prospectus and then the updates and, the remuneration, and then the K1s. I think it's all part of, the way you do business. And I think that's how people expect, professional investments to be handled. And I think you've done it excellent. No qualms on any of that.
All right, thank you. Tell me a little bit, Mitch, about what advice you might give somebody who was considering investing in commercial real estate for the first time, whether with Kenwood or with some other company.
So I'd say there's two ways to do it. The first way is to dig your heels in and become a subject matter expert on real estate and fly with the eagles and make your own decisions based on the information that you ascertain. And to those people I say, good luck. Because that's a hard road to go down. For me and most of my peers, it's much better to find an organization like yours to follow into these deals if you have the trust. And it can piggyback off their years of experience, and you've grown your business into quite a few buildings, and there's longevity there, and that speaks volumes, and that's what people want to hear, right? People want to know that you retain all, if not most, of your buildings, and the ones you did sell, you made a great return. So that's what I would say.
Great, thank you. Tell me, talk a little bit about how your investments with Kenwood have contributed to your overall investing goals.
So, we talked, everybody's got a different scenario on how they invest. I'm a small business guy. I have a lot of things going on, and a lot of my investments go to investing in myself in terms of growing the businesses that I do. That being said, there's getting a point where there's extra funds and extra things that I haven't done where I need some catch up to have a more well-balanced portfolio. So I think commercial real estate is a great avenue, for the long term, if not for me, for the legacy that I want to leave behind, because I think there'll be solid opportunities for my family to, prosper for years to come. So I'm more excited about commercial real estate the older I get, just because it's a cog in the wheel that I haven't fully grabbed my hands around. So hopefully you'll do some more deals. We're looking forward to my brother Steve and I are saying, when's Bill gonna do another deal?
I get it. Describe then, this is a good segue into this question, describe to one of our listeners who might be thinking about investing with Kenwood for the first time, what would you want them to know? What are the benefits that they would see out of considering investing with us?
The benefits, local company, right? So you're dealing with people that are, have their boots in the ground in the DMV and I guess a little in Baltimore as well. have an immense amount of experience, have a large handful of buildings, and have a sheet of references of people who love the work that you've done. So if you have all those metrics, it'd be hard not to go with an organization that provided you that type of safety, right? I mean, the one thing about real estate, they're hard assets. You really don't want to make a bad decision, right? I mean, and I think novices, you know, people like me who, you know, somewhat intelligent, not experienced, can often make bad decisions in real estate. There's just a lot of things that can undermine your investment. And I'm smart enough to know that. So that's why I'll leave it to somebody like you to pick the holes through it and do the due diligence and tell me that, you know, you need 2 rooftops and it's not worth it and the elevator needs to be replaced, and you know, those are the things that are make or break a building, as you know, and that's what you do on a daily basis. So I would say for most people, finding an organization like yours dealing with you specifically would be a great avenue for them to get involved with commercial real estate.
Mitch, thank you. This has been amazing. And I so appreciate you joining me today and sharing your experiences with me, with our audience, about what it's been like for you as an investor in Kenwood. This has been really wonderful. Thank you so much for the nice words and joining me.
Well, I'm appreciative, and you know, I think we've become friends through this process. I think all the conversations we've had in the past have helped me be a better real estate investor, and I feel that you've added a lot of value to my knowledge in your space, so I thank you for that.
Thank you.